Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu, this is Fintech Daydreaming.
Hey, how are you all doing? Paul Krogdahl here, and welcome back, dear listeners, for another great episode of Fintech Daydreaming. I have the privilege of being your host for this episode, and as always, I am joined in the virtual studio by my co-host and friend, Ville Sointu. How are things with you today, Ville? Got any good listener jokes to share with us?
Things are great. And for those of you watching the video, you can also see that there's a lot of sun behind me. So I think we're actually coming up on the spring here, at least soon-ish here in the Helsinki region in Finland. But we actually have an actual joke from a listener this week. Like we didn't have one last week, but this week we do. So the joke goes a little bit something like this. What is a long-term investment?
Good question, Ville. What is a long-term investment?
It is a failed short-term investment.
Oh, God.
I actually kind of like that, but it's thank you, dear anonymous listener, who unfortunately didn't want his name said on the broadcast, but looking forward to getting more of these great jokes from our listeners.
Absolutely. We need more jokes. We're starting to run out. So, dear, fantastic listeners, show us you care. Send us some jokes. The worse they are, the better. Maybe we should, Ville, start getting our guests to line us up with a joke for the following episode. That could be an
almost
approach,
like a
right?
prerequisite. If you want to become a guest, you need to give us a joke or something like that. Yeah, it's.
I like the sound of that. But anyway, today we are putting our focus back on the growing field of cloud-native third-generation core banking platforms and the companies that are setting the scene in this area. One of these companies is 10x, who are working to redefine core banking in a modular microservices world with their platform SuperCore. Now, as a lot of you know, I actually spend my working days focused on the domain of core banking and payments, with a close eye on the ever-growing field of platform providers and ISV companies building fantastic solutions in this space. I'm finding the shift by most, if not all, core banking providers from a banking product-centric paradigm to one centered around us, the customers, the consumers, extremely exciting. Now, driven by digital disruption and the growth of platforms, there is a need for the banks to rethink their core systems. And they're facing the world of cloud-native, data-driven, AI-powered, coreless, and super agile architectures. I, for one, am finding this extremely fascinating and really exciting.
Stop there, Paul. You really are a fintech nerd, aren't you?
Ville, come on. There is no other place I would rather be at the moment, right? The current disruption in banking industry is fantastically exciting. And the fintech trends is adding to the suspense, I feel, right? I would say the industry is currently in the middle of a perfect storm. And I am so excited to actually be sitting in the middle of all of this, just like you are. I mean, isn't this why we started the Fintech Daydreaming podcast after all?
Yeah, that's right. I think we're in the right place to do exactly this stuff. So let's go for it.
I agree 100%. So today we have the pleasure to discuss this trend as seen from the eyes of 10x, as we dive into the world of cloud native core banking with none other than Tam Holmes, who is the Chief Business Development Officer at 10x. Now, what can I tell you about Tam, apart from the fact that I've known him for quite some time and he's a fantastically cool dude? Well, he started his career at Morgan Stanley before joining PricewaterhouseCoopers as a management consultant, working within the, I believe it was the banking and telco industry. He subsequently joined the founding team of a small security fintech startup. And I mean, anyone that works with fintech startups in my book is a cool guy. But he exited from that after a trade sale in 2005. And after having worked as an independent consultant in the mobile telco sector, Tam joined Lloyds Banking Group in 2007 to build a real-time fraud monitoring system. He subsequently took a major role in digital banking technology for the UK's largest digital bank as head of program delivery, and also served as head of digital fraud and security for that group. Now, to me, that is an impressive bio, and I'm sure you would agree with the fact that we can't have had a better guest for this episode. So without any further ado, welcome to the show, Tam. I'm wondering, could you maybe, on top of my my introduction there, introduce yourself and share a little bit about your background, how you ended up with 10x, and maybe you've got a fun fact you'd like to share with us all as well to break the ice.
Yeah, well, firstly, thank you for inviting me on the show today. I'm honoured and excited to be talking about this topic. If I start with a fun fact, so in my career before Morgan Stanley, whilst I was at university, I worked in a whiskey shop in Edinburgh. I was at university in Edinburgh in Scotland. It's a great place. And we had about 250 whiskies in the shop. I was involved in a lot of whiskey tasting, shall we say. I got to the point where I could recognise certain whiskies, probably about 10, just by their smell and colour alone, without even tasting them. So that was my career before my journey into digital banking. And I guess by background, I spent 20 years, predominantly in digital banking. When I started with PricewaterhouseCoopers in management consulting, my first client role was working for a bank, building a digital bank, just at the start of the tech boom around the turn of the century. So I learned a lot then, and I really spent all those roles either as a consultant working inside the bank itself, and now with 10x working for a SaaS provider. So had a lot of experience in the sector, should I say. There's a lot to learn still, and I think it's changing dramatically. Actually, in my view, I think there'll be more change in the next 10 years in banking technology than there probably has been in the last 20. I think it's really exciting.
Yeah, no, I agree completely. I mean, as I said at the beginning, I think we're in a perfect storm as far as the banking industry is concerned, and we are sitting right in the middle of it. I think it's the most fantastic time ever to be involved in this industry. But as mentioned, today we are going to take a closer look at 10x. I wonder, Tam, from your perspective, how would you describe the trends we are witnessing in the banking industry currently in regards to core banking systems? And maybe where does 10x fit into this new emerging world that we're living in?
Yeah, so I think, I would sort of characterize two main trends in this area. So first one is to think about where the workloads are hosted. So we're in a paradigm at the moment where the majority of those banking workloads are hosted in data centers that are typically owned by the banks, and they run their own infrastructure. That workload is moving into the cloud and increasing into the public cloud. So that's a massive trend following a number of other industries. I think the second trend, probably just as important in core banking, is the move to what I call a simpler, more customer-centric architecture, a digital architecture. I think if you look inside a traditional bank, it's a story of product and channel silos, and those product and channel silos have to be broken down, I think, into a simpler application architecture that has fewer applications that are consolidated in order to, get the benefits that a lot of other industries have got. When I think about that integration architecture, almost a good analogy like Paris. So if you look at the city planning of Paris, it evolved as a medieval city till around sort of the 17th, 18th century. And there was a lot of streets with a lot of chaos and complexity, and it's actually really hard to get around the city. When Haussmann replanned the city and redeveloped it, he redeveloped it with single linear lines of communication, often from sort of central hubs that the streets radiated out from. And the outcomes they got from that were, reduction in disease, clearer lines of communication, and the city was sort of transformed as a result. And I really think when you think about banking architectures, you need to think about, what's the shape of the architecture that you're going to end up with, because you need to move into the cloud, but I think it's critical not to move the complexity of the application architecture into the cloud. So I think this is why these two trends for me sort of sit very closely together. And so where do we sit as 10x? So we're a cloud native platform. So from the get-go, we support banks on that journey into the public cloud. And then secondarily, we offer a sort of consolidated architecture that allows our clients to end up simplifying their overall application architecture. And then the benefit of that really is all around the data and the customer experiences and the amount of automation you can offer to the clients as a result.
That's fantastic. Actually, just going into a part there, you said about the change from, you said, almost product centricity to client centricity. That's one of the areas that I've got a lot of passion for. I truly believe that banks need to move to client centricity. Do you see the need for a business change before the technology change, or do you think the technology will drive the business change?
I think in many ways it needs to be business led. Yeah. And the reason for that is, inside a bank, most technology projects need to have business sponsorship if they're going to succeed. And I think you in many ways you need to do on a right to left basis. So what are the outcomes I'm trying to achieve? And those have to be business outcomes, right? Because technology outcomes without the business outcomes are not worth achieving. And then what's my pathway through that? So I strongly believe it should be business led. And the work we do with our clients is typically business led. We're talking about large scale transformational initiatives that really allow the banks to change the shape of the operating model. I often think about the technology being very closely bound to the operating model, but it's very hard to change the operating model if you don't change the tech. So business led, but the two need to run together.
Yeah, absolutely. And I think 10x is, if we're honest, entering into a growing sea of technology disruption and new fintech vendors delivering cloud native core banking solutions. I'm wondering, in this growing field of competitiveness, what is the unique value proposition that 10x is bringing to the table and making it stand out above the crowd?
Yeah, definitely. Good question. So I think a lot of this is how we thought about building the product and the company from the get-go. And it was very important to us to what I call engineer for tier one. So that's in terms of the security, the scalability, the reliability, and the resilience of the platform. Yeah, a lot of us in the business have come from backgrounds either in technology or helping to run parts or in some cases all of big banks. And so we understand sort of how the banks think about it from their side of the table, and have engineered the platform really to meet those exacting requirements. I think secondly, we've, in terms of our value proposition, again coming back to this sort of DNA of 10x, we've brought together and really fused the technology knowledge, particularly in cloud native, but with that banking knowledge. So when we talk to clients, we're able to understand and appreciate their problems and present the solutions in a way that they can understand, right? Because I think it's very important to have the right technology, but equally you have to be able to communicate that technology to your clients in order for them to be able to see how they can achieve their outcomes. Yeah. I think thirdly, there's a philosophical point around the sort of scope of services, because I think you can have a very skinny core or you can have a bigger core. You'll note from our name, the super core, where our thinking tends to go. And it comes back to this hypothesis around how do you simplify the overall enterprise architecture of the bank and end up having fewer applications running in a simpler pattern. So we strongly believe that you need to do the traditional core banking aspects, but also a superset of functionality to allow the clients to configure and curate a sort of straight through automated journeys. And then I guess finally, and it's the place where it sort of begins and ends, which is in the data model. So having a data model that is truly customer oriented and critically is designed in a way that doesn't lock clients in to a current paradigm. So we've spent a lot of time designing and engineering our data model so we have high degrees of confidence that as new products and services come along, and indeed new channels in this next decade and the following decades, that we won't need to re-engineer the data model, and it will be able to flexibly cope with those changes.
So chiming in here as a person who works for an incumbent bank here a little bit. So as Paul mentioned, I mean, there's been a lot of these core or super core or coreless banking providers for a while now. And broadly speaking, there are two ways these systems get adopted to an incumbent bank. You start a phased migration function by function, which is the kind of traditional, let's do a core banking migration type of setup. Or you take a clean slate approach, where you kind of start a new bank within the bank, perhaps with a new brand or just focusing on a certain function. Sometimes we've seen these launched as kind of neobank proposition, trying to imitate the stuff that the likes of Monzo and Revolut are doing, perhaps outside of these incumbent bank spaces. But Tam, you've been part of this for a while now, and looking at both from a new entrant and incumbent perspective, what have you learned about these core modernization strategies? What works and what doesn't?
Yeah, so I think firstly for me, sort of context matters. So I think in the right context, all those approaches work. And to me, it sort of depends what you're optimizing for. Is it speed to market? Is it transformation of a legacy operating model? Is it operating cost? And when I look at it, I sort of think of it as maybe 3 different approaches rather than 2. So I think firstly, I'll talk about function by function. So you're inside a big bank, you want to transform, so maybe you pick out, customer identity as a problem domain and begin on that, and then, sort of move horizontally through the operating model to begin transforming it. And I think that approach works really well if you haven't crystallized on what the end state looks like. So it does allow you more flexibility as you go through the program. I think the next approach I would characterize as what I call a clean build, where you build the entire stack and move the products and customers sort of lock, stock and barrel into that. I think that's intellectually the most compelling approach, because it's, you can sort of envision the new bank and imagine all the customers and products inside it. I think what is harder is what's the pathway to get there, which I think is what leads banks to the sort of first approach I talked about, which is function by function. And I think in the clean build, it's very, very important that you choose the right partners as a bank, and the capability of your own team to be able to execute that is at the top notch. And then the third approach that we saw a lot of, I think, in the 2010s, which is what I call a speedboat. So building a new brand alongside the parent bank, and then think about migrating but launch that into the market, and then think about basically migrating the rest of the population of the bank's customers and products into that speedboat. Now, what we're seeing is, if I think about those as approaches A, B, and C, with the speedboat being C, a lot of inquiries we had, I guess 2 or 3 years ago around speedboats, they've really dried up, I would say, and actually people are now really thinking about this function by function or clean build. And in fact, the majority of inquiries we're fielding at the moment are around migration projects, which is something we predicted and really built the company around. But equally, we're very heartened to see that the market is shifting gear, and I think COVID's been a big part of that. It's accelerated digital adoption, and I think it's accelerated banks, plans about transforming themselves. In terms of what doesn't work, I think you can spend too long at the experimentation stage, spend a lot of money and maybe not get the outcomes. So I'd say be really thoughtful about, as a bank, what you want to do in experimentation rather than true outcomes. And definitely, I think replicating the old operating model in the new stack is something that you have to be super careful of, because typically when banks start these projects, they take a team from their existing team and they come sort of attached to the operating model. So I think you have to, as a leader in the business, you have to think really carefully about how you bring the right stuff from the operating model, but nothing of the legacy that you don't want to reproduce in the new bank, I guess. And I think for me, stranded through all of it is the leadership, the executive leadership and vision is the single biggest critical success factor. So if that's in place, you can move the world.
Yeah, there's a lot of there that I completely agree with. I mean, if you're not changing the organizational culture, the way you are working, it doesn't matter if you have the world's most advanced technology platform to run the business. If you don't change yourselves, the organization and the ways of working. So yeah, it definitely should be seen as an opportunity to transform the entire working culture on top of the technology stack rather than the other way around. So yeah, really interesting point there. The one thing that actually has been bothering me for a while is that core banking migration as such. I mean, it's not an old invention. I think we've seen technology companies in that space working for 20, 30 years in different capacities. And yet it's actually pretty hard to find somebody saying that this was a successful core banking migration project. And that's why we saw a lot of these kind of speedboat approaches just a few years ago. And I think the jury is a little bit still out on whether that was kind of a good answer to these migration problems or not. But yeah, time will tell. Looks like the pendulum is now shifting again towards migration, perhaps with more modern technologies than in the past, but we'll see how it goes. But shifting gears a little bit, now, one of the things that has intrigued me in this space for a while now is that looking at how the market develops for new entrants. So, and again, trying to lower the threshold of entry for smaller players to become licensed or financial service providers, or even banks to a certain kind of degree, because I think the answer for especially fintechs to become successful is that they need to focus on a very narrow segment in order to be kind of more focused on that and be more productive than perhaps the incumbents in a specific space. Now, coming at this from your angle, now, how does 10x think about this small service provider market? Are you content in serving the big players doing the migration projects, or is there a future out there somewhere where a small fintech could even buy a pay-per-use core banking as a service from someone like you guys that will allow the fintechs themselves to focus on things like regulatory compliance, customer service, and user experience?
So, we're very focused on transforming tier 1 and tier 2 banks. That's definitely our mission right now. If I look at the rest of the decade, though, we absolutely want to be serving banks of all sorts of shapes and sizes and scales, and fintechs. Now, interestingly, we're working with Westpac in Australia at the moment, building a bank as a service platform. So Afterpay have signed up to run on that platform. They started in 2015. So obviously in 2015, we're pretty small, right? They're now at a stage where they've got, between 50 to 2/3 of the market cap of some of Australia's biggest banks. And they're going to be running on the 10x platform that's hosted by Westpac under their banking license. So you can clearly see there is a technology infrastructure and operating model path for a fintech to come straight onto that platform and grow to become a very large business. In fact, Westpac have signed a smaller fintech just right behind Afterpay. So, one of our strategies for serving that market is to partner with the bigger institutions to allow fintechs to come and ride on their rails. But ultimately, we do want to be serving, the smaller banks as well. But I think that will be later on in our evolution. To your point around sort of focus for fintechs, I think it's very important for a business like ourselves to be focused, so we have a clear message to our clients and into the marketplace. But again, coming back to my point around the tier 1 engineering, I think all financial institutions, irrespective of size, would be reassured by the investment in things like security and resilience, right? That's needed by everybody, and I think we're seeing, particularly in the UK market, looking at the growth of some of the neobanks, they've sort of hit a bump in the road after 3 or 4 years where they've had to re-engineer their processes and stack in order to get, regulatory approval to grow even more. And that's fundamentally because the stack they would have started out with in the operating model wasn't what I would call tier 1 engineered, right? So for me, I can really see the benefit of being able to offer those tier 1 capabilities out of the blocks for the small fintechs.
Which actually leads us on to a parallel question. There is a need, as you said, for a lot of these smaller banks to think about the long term, and therefore, like you said, think about tier 1 scaled applications and platforms. Do you see from your perspective at 10x a steep growth in the banking as a service area? I mean, is that something which you would also consider heading towards to deliver services capabilities rather than the platform directly?
So we don't have an ambition to become a bank ourselves or pick up a banking license to offer what I call a true banking as a service capability. So our strategy is to partner with banks in particular territories where we can be the technology infrastructure, provide them to offer those services. There are many reasons for that, and again, sort of coming back to this focus, right? We need to maintain our laser-like focus on the things we're trying to achieve in building this transformational platform, and then let financial institutions take the benefits of that transformational platform and take them to the end customer. That's what we're focused on, working with the banks to achieve the things they want to achieve, whether those are new banks or old banks or big or small banks.
Okay, so Ville, it sounds like we still need to keep looking for our banking as a service provider for the Fintech Daydreaming Bank.
Yeah, indeed.
Yeah.
I love the brand though, so we got to do it at some point in time. Maybe
absolutely, yeah.
We're going to find a vendor from the guests, right? So
yeah,
looking.
Yeah. But
we'll definitely assist you on that journey. Don't you worry.
That sounds fantastic, Tam. But actually, I need to ask, what's the story behind the name 10x?
Well, so 10x, really, I guess it's a shorthand for 10 times, right? So fundamentally, if it's not 10 times better, it's not worth doing. So that's the internal moniker we live by in the firm. So when we're building the platform, we're engineering our processes, the bar it just has to be 10 times better than it is today. So it's a shorthand, and it resonates well with the clients as well.
And I need to give a shout out to a colleague of mine that I just talked to this morning that said to me that 10x is like the coolest name that I have ever heard. I wish I had it. So
oh, that's brilliant to hear.
Indeed.
As long as it doesn't mean 10 times more expensive.
Yeah.
No, definitely not.
Yeah. Then he of course said that we need to do a company called 100x then, but
actually, guys, I think that's a nice segue into a more lighter frame of mind here, moving on to our same but different, now that we've got some time to change focus and maybe talk about something completely different. And I was actually, there's been a trend I've seen in banking press recently around, work-life balance. It started off, I believe, with Goldman Sachs. They were getting quite beaten on the number of hours that their bankers were working. And I think they were sort of recently saying they're going to try and bring that down now to 100-hour week and junior bankers not having to work on Saturdays, etc. And it was, to me, extremely refreshing to see Citibank or Citigroup coming out with, a Zoom-free Friday. I've got to admit, for myself, my calendar seems to have got filled up even more since the pandemic started than it used to be before. And I'm wondering, Tam, are you suffering from Zoom fatigue?
I've definitely got a bit of Zoom fatigue, a little bit of Teams fatigue as well, and a bit of WebEx fatigue, as I talk to different clients and different organizations, have the delight of sort of working across all of those platforms. But I think, like most of us sort of doing this type of job, we sort of flip from one session to the next, and definitely a bit fatigued. I think Citibank has shown great leadership, I think, in terms of sort of culture and work-life balance and how they're approaching it. And I think, really sort of laid a marker down for the rest of the industry. And when we're thinking in 10x about ways of working, for sure, there's an inflection point at the moment that COVID has stimulated, and it will definitely look different when when the pandemic's sort of under management and we're, invert commas, back to the office, but we'll expect to continue to have lots of virtual meetings. So we just need to make it work, I guess.
Yeah, I think it was about a year ago as well, wasn't it, that Microsoft was rumored to be talking about a 4-day work week. Didn't see much about that afterwards. But Ville, what about you? I mean, working in a big bank.
But yeah, so this article is resonating to everybody who is working remotely these days, because it is way too easy to kind of find an hour slot, half an hour slot in everybody's calendars, and then you basically end up with back-to-back calls over video all the time. Then you have to basically eat your lunch at the computer because you have no space in your calendar, and it's much worse than it was when you actually had physical meetings. Now discount the fact that you don't even have travel days anymore. You don't have real conference days anymore. I mean, it's impossible to book a half a day for a virtual conference, for example. So it requires some very careful attention, and there are kind of certain tweaks you can do in your calendar, like making sure there's always 10 minutes between all the meetings and things like this. But ultimately, it's a bit of a mess. So I do kind of welcome this, almost like this kind of divine intervention from the management, saying that no kind of video calls on a Fridays, for example. That actually is a nice idea, almost like a kind of a digital version of a casual Friday, if you will. You don't even have to put on a collared shirt in order to get in front of the camera, right? So yeah, I think all the companies are looking for answers to kind of get rid of this kind of meeting fatigue, and I think this is an interesting way of doing it. Again, it's like a digital version of a casual Friday, so I welcome it and I like it.
And does anyone use a telephone nowadays as well, just for voice calls? I feel like I make maybe one call a month now on voice. It's really interesting how it's changed the video.
Yeah, that's actually interesting, because there's almost like this culture that develops on certain calls. So I have like weekly calls. Certain calls are always with no video at all, but then some are always with video. So it's kind of this kind of unsaid agreement between the participants of whether we're going to use video or not. But yeah, most of it's still kind of face-to-face over cameras, I guess.
And I suppose, looking at the positiveness of what the new CEO of Citigroup has gone out with, I think there's a step between management setting a precedence and then actually seeing that getting executed. So I really hope that it follows through and that people within inside of Citigroup actually takes respect of each other's calendars going forwards, because it's very easy to fall back into old routines, right? So it has come to an end of another episode. Fantastic discussions, really interesting insights into 10x. But before we sort of close out completely here, Tam, Ville and I would like to give you a chance to let our listeners out there know how they can find you, how they can get in touch with you, how they can get more information about 10x.
Sure. So if they navigate to the 10x website, we have a form to fill in, so you can introduce yourselves, and we would love to get in touch. We hear from banks all over the world sort of every week, but are super interested in working with those banks who want to transform themselves. So yeah, so thank you for the opportunity. Please have a look on the website and get in touch. It's 10xbanking.com.
Fantastic. Thank you again for coming on the show and sharing the great insights and an experience that you've had, and also giving us more to think about around cloud native banking and also 10x. But most importantly, thank you to our dear fantastic listeners for hanging out with us for yet another episode. And as usual, we'd love to hear from you. So please send us your feedback, comments, jokes, whatever. Just get in contact with us. You can reach us via email at hello@fintech-daydreaming.com. You can ping us on LinkedIn, Twitter, YouTube, or the Anchor FM page. Any of the channels will work. We'll gladly reply to you. We're also, if you're interested, looking for sponsors for the Fintech Daydreaming podcast. So if you're interested in sponsoring us and have us promote you, your company, your services, then we'll gladly do that as well. Now, Ville and I will be back in 2 weeks' time with a new guest. We hope that you have a fantastic Easter for those of you who celebrate the Easter. If not, just please have a good weekend. And we'll see you again in 2 weeks' time. This has been Fintech Daydreaming.